All right, this is an example of all the time charts agreeing that the price is above all the moving averages. You can just see on all the time charts how price is flowing upwards. And over time, we understand the dips that take place are just part of the correction that's necessary to get into the price on a trendline break or a bounce off of. I guess the key thing is to see the 200 moving average moving up on all the time charts. That's one of the key things that we have to look at. On the lower time charts, price will fall below the 20 and the 50. And on the lowest time chart where we take our trades, price dips even lower and sometimes gives us some of the best trade setups. So we want price to be above all the time charts in a sense that we have our main trading time chart, which is the 10,000 tick chart, expanding upwards and looking bullish. And when a price drops down like this on a 15-minute chart or a 10,000 tick chart, it's going to look bearish on the 1,000 tick chart. So at some point, this is our foundational time chart to give us the real view of what we're looking at. Okay, and so yes, it'll dip down below on the lower time charts, and then we look for it to come back up when we have trend line breaks like this, coming back up to the upside. As long as these three, I would say, because what'll happen is you'll get big dips like this right here. You get a big dip like this right here, you still see that the moving averages are going up. They're still trending up in the right direction, even on a danger zone pullback like this, right? So when it pulls back like that, let's see what we got here. Here we have, this is the 2,000 tick chart, and you see everything drop below all the moving averages. So that's why it's the danger zone, because sometimes, here's what it looks like on a 1,000 tick chart. Sometimes it can reverse. It can reverse. Now, if you get all these time charts like this, okay, let's take a look at this right here. Here's where the 5,000 tick comes in handy, because on a big dip down like this, before it went up, this is the best, some of the best prices that you can get. This is some of the best opportunities is when it drops down here. It's dangerous, but it's the best price opportunity sometimes. So we look at all the time charts. Okay, what's going on in the 5,000? Well, that cuts this in half, 10,000 to 5,000. Well, let's pay attention. The moving averages are still above the 200.
Price has fallen below your alert. 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 Price has fallen below your alert.
It's time to go check it out. Price has fallen below your alert, and it's time to take a look at the action on the chart. So it's real interesting to see everything start to turn against us when we're going long and still maintain a bullish attitude on the 10,000. This is the tricky part of any strategy has a tipping point. Every strategy has a breaking point where it's getting weaker, it's getting questionable, it's getting dangerous, and now it's completely broken. Okay? So the danger zone is called the danger zone because this is where it could break. Okay? It's also the maximum stress level, if you will, because once it dips down there, we're looking for, and even on the 5,000, you got a sell signal on the 5,000 tick that says this is a sell signal. This could easily bounce up to the moving averages here and roll back down and roll. It's what's called a weak sell signal, okay, because it's above the 200, but it's below the 50 and 20, and the 50 and 20 have crossed under one another, and they've started to go in the other direction, right? So this is, when I see something like this, that's why it's called danger zone. We may not even want to trade until price gets back up above right here, get back up above the moving averages for a positive and strong buy zone, right? So once it gets above that area right there, we're looking at this area over here. Okay, let's look at this area over here to show us what's going on here. Yep, right about here is where everything starts to turn around on all time charts. All time charts. Let's look at this up here. Yep. Right up here, everything gets back up above all the moving averages. And now we're looking to go long. We could have had our trend lines drawn this way, waiting and anticipating that, like that, right? And let's see on the 5,000 tick chart, what does that look like right here? Here we go. Yep, right here. We got the trend line going this way. Perfect. So when it dips into the danger zone, we may not want to take a trade down the bottom like that. We may want to wait until it rises back above into a strong buy signal, right? So this is how we manage the trends and the pullbacks on all time charts. It's important to use multiple time charts with this, right? Because if we're just using one, it's not going to really look that good. So right here is the trade opportunity. When price gets back up overall, breaks the trend line, overall the moving averages, consolidates. This is an area, stops down here, targets up here. And once it closes above all the moving averages and everything's agreeing, it's usually, and I'm not going to kid you, it's about a 70% win rate that I've noticed. I'm going to put that circle so we can see it on all these time charts where it's at. Yep, you see the circle right there. That's where the entrance is. And it's probably a 2-to-1, 70% chance win rate, right? And this is one of my favorite strategies, the moving average trend line strategy. Very powerful, very interesting piece.